Hi and welcome to the Market Alert for Friday, the 27th of May 2022. So massive short squeeze sends stocks soaring as macro massacre continues. Bad news is good news again. So the market up very, very strongly yesterday. What they're saying here was a short squeeze along with this news item, US stocks gain as risk returns amid month-end flows. And this one in particular, thank retail investors, the S&P is not in a bear market. And for all those last hour ramps, I don't buy the last hour ramps as the retail investors, it's more like the plunge protection team. But there is that, buy the dip that's been in place now for the last 14 years. Retail investors seem to be behind the quick late afternoon recoveries in the S&P in the last few days. I don't think there's enough of them to do what they're actually doing, to be honest with you. It seems to me it's more of a manipulative move to the upside to suck in the retailers to then drop the stock on them when the bear market returns. I mean, the economic news is not good, is it? US pending home sales plunged to weakest since 2014 as unsold inventory spikes by a record. And then we go to this and we see foreclosures, wave sweeping US crests in Chicago, so homes being repossessed. And then the GDP numbers yesterday. As we see here, US economy contracted even more than expected in quarter one, raising odds of recession. So what were the numbers? Well, the numbers came out. So you can see there, prelim GDP quarter on quarter, minus 1.5 when it was forecast at minus 1.3, and obviously worse than the previous month as well. And yet the markets continued to move to the upside. To add to this, oil has spiked to near post Putin highs, gasoline at record highs ahead of driving season. The oil hasn't spiked to post Putin highs. That's 138, but nonetheless it's broken out of that sideways move that I spoke about yesterday in the market alert. So President Biden has a problem too, right? He does. And yet we continue to see stocks soaring. It's just madness, isn't it? But that is what it is. For economic news today, let's have a quick look. We've got FOMC Bullard speaking at 12:35. We've got PCE numbers out at 1:30. That looks like it's going to be a bit of a non-starter as well. Forecast the same. 3 p.m. we've got revised UOM consumer sentiment. Again, bit of a non-starter there for this as well. Okay, let's just a quick look at the gold-silver ratio. This is moving lower, which means that silver must be moving higher, and it is overnight. So they don't seem to want to sell it off at the moment. So let's wait and see what happens today. See if it holds on the overnight. That $22 area still giving the market a bit of grief. Okay, let's have a look at the Dow. And you can see yesterday moving strongly to the upside, trading up to this resistance area here of 32,755. Whether the market will get through or not, I don't know, but it drove through the 89% retracement. We've had 5 straight days up now in the stock market. It's due for a breather. So let's have a look here. Unless, of course, these so-called retail investors continue to buy the market mid-afternoon, which, like I say, personally I'm not buying. I think it's more of an institutional thing. There's not enough retail buyers to make the sort of moves that we've seen in the last 5 or 6 days. Not with the fact that they're being squeezed on all sorts of inflationary pressures, gas, oil, energy prices, food, etc. And the prospect of losing their jobs as we go forward as well. But these are the downside targets just in case the market does move lower. And if it doesn't and it continues to move to the upside, well, we'll go from here to here. We'll just get rid of these ones that we don't need. And let me just drag this out of the way. So 62% retracement here as well, actually, from here back to here. So that's why the market stopped yesterday at 32,755 at the golden ratio there. And in the 30-minute chart for yesterday, you can see the move just all the way to the upside. Let's just have a quick look at how much the market actually moved, starting with yesterday's opening of the German DAX. to its peak. You can see there 720 points. The market finishing up about 500 in the cash market during yesterday's trading session, I think. Let me just double check that. We go from there to the high. That looks like the high there. Yeah, 529 points there for the Dow for yesterday. The market's sideways at the moment, finding a bit of support at yesterday's close. And like I say, watch for the high. If the market rallies up to the high, see if it holds or it fails. Like I say, it's due for a bit of a pullback. And the May options expire today as well. So let's just have a quick look on the upside, just in case the market does move in that direction. There, the fibs on the upside. If the market fails to hold at this level, then I'll start drawing in from there to measure back to see what sort of areas we've got here. Because it will be interesting to see where the market finds support on the way down. 62% retracement and 50 is the DP and the 50 EMA as well. So the DP level should be fairly strong for the market should prices move lower. And in the German DAX, again, you can see also prices trading up to the 78% retracement drawn from here down to this low projected back. That's where that is. We've already gone through the 89% from here to here. As we said yesterday, we would focus on this area. And the market's currently trading there, so we can remove this Fibonacci retracement. Again, if the market is to make any sort of move down, then I would be looking to draw a retracement in back from here to here. So let's just do that just to see what we've got. That would be the first set of fibs. And if the market was to go through the 89, then I would use this one and then draw back a new set of fibs there as well. But firstly, coming back, you can see that the 38% retracement, 5 EMA, 5 moving bar average, 50 EMA there as well. So 14,131 is an important figure to keep an eye on there. In the 30-minute chart for yesterday, again, you can see how the market just moved from to the upside. Had a bit of a sell-off in the futures. Market got to the DP, and then we moved to the upside. As you can see there, let's just get a quick ballpark figure, and there we've got 302 points. Big move for the DAX during yesterday. Again, like the Dow, market currently sideways, sitting on the close. And if we were to draw in exactly the same fib retracements, you're likely to find the same sort of area. 62% and 50% retracement is going to be an area where the market is likely to find support. Watch the high as well. We're not too far off this in the DAX, closer than the Dow. So watch we don't see the market move to this area in the futures and the initial cash, and then bring the market down there after sucking a few more people from the last few days, thinking that it's going to continue to move higher. But we always get a retracement, whether it's 1 day, 2, 3, 4, it doesn't matter, but there'll always be a day where you get that one red bar in the daily chart, like this one. Well, it started out being one, but then they picked up again. That was the so-called retail traders buying back the market. So you can start off with the down days, as we've seen there. The market moves lower, then comes back and moves back to the upside. But the down days I'm talking about are this sort of down day where it's down and stays down for the day, as we've seen before. Critical areas for these markets at the moment. And in the currencies, GBP, JPY, still stuck in a sideways range. Well, we've got an ascending triangle shape there, as we had in crude oil, which is broken out. And that's the sort of direction you'd be looking at if you used to use the orthodox technical analysis there. At the moment, the market, you see all of the averages converging there. We are green at the moment, trying to break to the upside. So in the 30-minute, we can see that we had a nice move to the downside there. That's a 181-point move in the yen market, oversold, finding support, divergence, crossover, and then making its way back using the DP as a support during the retracement of this swing here, where you can see that we've got a 50% retracement here for the market at the DP level, and then continuing to move higher. But fairly sideways in the daily chart, but some good moves in the the intraday 30-minute chart there. Like I say, it's a good 181 point move there. Meanwhile, the pound moving higher. I don't know why, given the fact that the Chancellor has printed another 15 billion yesterday to help out with energy prices. This is going to be a drop in the ocean, given all of the other inflationary pressures. But hey-ho, it's better than a kick in the teeth. So the pound responding in a positive way to this, which is slightly odd, unless it's because the dollar's moving lower. But 62% retracement, 127 is going to be an interesting area. We've come up off the lows of 120, 150 down here. So the pound's had a good run over the last week or so. And yesterday, you see the market there responding and then eventually moving up as the dollars move lower overnight. And finally, in the metals markets, we've got silver continuing to move to the upside, staying green at the moment. I'm surprised because yesterday morning we saw the market being sold off. They traded down to the previous day's low. No, it went through the previous day's low, if I recall. Yeah, to it. There you go. And there it found some support. A bit choppy, but managed to move back up. Moved up with the Dow yesterday afternoon. There was a big spike to the upside at 1500, 3 o'clock, and then overnight we've had another move as well, which is 3 a.m. in the morning, 12 hours later, which is interesting. Currently at yesterday's high. It needs to take this out in the daily chart if we are to move higher. 62% retracement there of 22.22 that needs to be removed in order to head up to 22.68 and then back to $23 an ounce. Holding at 22 is going to be very important for this market because it's been smashed back through this so many times in the last few days when the market's got to it. At the moment, it's well and truly through at, well and truly, 22.07 and a half. It will need more than that. It needs to get through the 22.50 to hold. So be prepared for the 1 p.m. smash later this morning. Right, gold also moving back to the upside, but not as strong as silver, which is why you saw the gold-silver ratio moving to the downside there, which is unusual to see. But of course, at some point, the two have to come into line. The average of the gold-silver ratio is 15, and currently we're sitting around 86, aren't we? 83. We went up to 86, didn't we? 88. So yeah, this has got a long way to go, and that means that the price of silver has to accelerate to the upside faster than gold, and it does on occasions, did in 2020, but at the moment it's still very, very steady. It still looks like it's out of favour. The dollar continues to move lower, breaking the 62% retracement. Watch the 50 EMA. If it breaks this, there's your two downside targets. The 100 is going to be critical on the downside. Amazing considering that in the monthly chart, if we just compress the data there, that 103 and the 105, there's quite a bit of dollar weakness around at the moment. So watch the 100 level if the market moves down to that area. Let me just draw this one in at the bottom here. So yeah, 99. So that's the sort of area, just 24 points higher, 23 and a half. Yeah, so 89 is going to be a crucial area to begin with, but then it's going to be the psychological 100. If that's broken, then you will see gold and silver move a lot faster to the upside. Yesterday we saw, as I've drawn in for the last few days, that sort of triangular shape, and the market breaking through that to yesterday. Now up to $117 per barrel. We know that the high is 138, if I recall, unless it's rolled on. Oh, yes, 138. So we've got a bit to go on that one, and we've got 120 there. 117 is the current price. $3 is nothing in the daily moves of the crude oil market at the moment. So there we go. That's a quick roundup of everything for today and what's happening overnight. Let's see what happens today. Like I say, we're 6 straight days up on the stock markets. Let's see if these so-called mythical retail traders come in and buy the market late on a Friday afternoon. That'll be a real test to do that. Anyway, that's it. Have a great weekend. As ever, thanks for watching. See you in the next one.